Do you ever wish you could get inside the head of a professional trader and understand why he does what he does? And with that professional trader explaining his thought process in detail with real trade examples that trader made, how valuable could that be to your trading? Well, in this video, you get that opportunity. Bar by bar, SMB trader Justin Spiro breaks down some trades he took with his exact thought process. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to have developed numerous 7 and even 8-figure per year traders. We hope you agree this is the top YouTube channel to help you grow your trading account.
In this bar by bar video, you're going to learn how to trade a second day mean reversion short in stocks that are overextended and put in a short-term top on day one. We're also going to discuss the market conditions that make these high probability trades. We'll take a look at what technical levels to look at and trade off of for these second day mean reversion trades. You'll also get insight into how I game plan for these trades before the market opens. Finally, you'll learn what an A+ breakout trade looks like and the variables that make these much better than your average breakout. We're going to go over some trades from yesterday, which was the 24th. I'm going to do something a little different this time. I'm going to go over my game plan going into the day, and then we'll jump into the trades. I know some new developing traders have some trouble game planning, so I'm just going to show what my ideas look like on paper when I'm going into the open. So yesterday, I kind of thought that, well, not yesterday, the 23rd, there was a shift in momentum. And if you look at this chart of the SPY, you can see that it got over that recent high from the beginning of February, and we failed. Basically, what was going on is there was a lack of progress on the debt ceiling, and there was no more meetings scheduled for the 24th, which was yesterday. And so I thought there was a good chance that the market could move lower, especially after that shift in momentum, which you see highlighted right here from the 23rd. Going into the day, there were a few recent runners, and we'll dig into these charts. But my plan for AI, it failed from 29 yesterday, which is a big level on the daily, and it closed near lows. This morning, it's testing its anchored VWAP from the 5:15 guidance news at 26.75. I think we could push off of it at the open, and I'd love to short a pop into 27.30 and 27.70, and then look for that to break for a move back down towards 25, and I would risk a hold above 28 for that trade. So just very specific about what I want to see. Carvana was another one, and here are the executions for reference. Carvana was another one, had a nice move yesterday, meaning the 23rd, but I think it was just too late to the party, meaning AI, UPST, PLTR were all squeezing out. And those are high short interest names, and Carvana almost has a 50% short float. So more than 50% of the float is short on that one, or right around 50%. AI, UPST, PLTR, all high short interest names that were running, and Carvana ran the day before, but I think it was just late to the party, and it ended up being a false breakout because it closed below 12. And we'll take a look at these levels in these charts soon. Buyers could be bagged if it holds below the prior close. Looking for a pop and fail into 2-day VWAP and then red on the day for an add. Shouldn't hold back above 12.50. Again, there are the executions for that trade. PLTR, the other idea for yesterday, touched 5 ATRs in 5 days. So that's how I define an overextended stock. Sometimes it's 4 ATRs, sometimes it's 5 ATRs. Depends on the history of those ATR bands that we went over last bar by bar video, I believe. It couldn't push any higher, put in a lower high, failed, and closed below VWAP. I think this one is ready for a short as well, looking for a pop into 1260 versus a hold over 13. The anchored VWAP from the breakout is 1195, so I'll be watching that area on the downside. UPST failed hard into the close and closed on lows. Look for a pop into 2-day, but I'm not sure this one is going to get there given how weak it closed and the gap down. I would settle for a short into 2650, which acted as resistance on Monday and support yesterday. Clear inflection point there. So what's an inflection point? Just an area on the chart where there's a lot of volume, not necessarily support, not really resistance, just an area where a lot of volume is being done. And then we're going to go over one from last week. And this was my game plan going into the day. So on May 16th, after the market closed, there was a headline that Micron was getting 1.5 billion from Japan, and they were investing 3.6 billion to expand production and meet growing demand for memory chips. It also reduces their reliance on China. So this was setting up to be an A+ breakout. Holds under 65, I'm wrong. Looking for a dip into 65 and a back through open long. So just wanted to sort of showcase how I write out my AM game plans in the morning. Very detailed, very specific. Now jumping into the charts for these trades. On this day here, which was the 15th, May 15th, you could see that AI had a large volume day and it got back into this range over $20 and it ripped higher. Basically what they did is they provided some forward guidance and they expected it to beat the street's expectations. So this candle here started this recent run up. And if you anchor a VWAP from the start of this move and follow it up, it's a good inflection point. So you can see from that start of the move, who's in control, buyers or sellers. So just a good reference point, and I was using that for this trade. And then you could see this 29 level, which is highlighted by this yellow circle. Each time it popped into there, it failed, got above, failed back below, and was trading into it the prior day and then failed and then closed near lows. The day before this trade, the 23rd, popped right into 29, failed, put in a lower high, and then closed on lows. So coming into this day, looking for a pop into 2730, which you could see was the morning low, broke through it on volume. You can see that volume there, and then acted as resistance into the close. So I wanted to start my short there, but I also wanted to give it some room in case it traded into 2-day VWAP. Which is where the VWAP flattens out from the prior day. You could see off the open, fails, pops up into 2730, taking a little bit short there, just being very patient with it, pops into 2770, and I'm adding the rest of my size. Getting more size at 2770 than I am at 2730. And then I'm just making sure my risk is in check to where if it holds above 28, there are no surprises and I'm going to end up losing on the trade exactly what I planned to. So the trade is planned out already. There aren't going to be any surprises. My risk management is in check. And then from there, you can see it breaks through VWAP, pops up, fails, and this line that I have here is the prior day's close, which acts as a good inflection point. So most of the time, I'm always have marked on my charts the prior day's close and the opening price. Two big inflection areas for the stock. It fails. Now it's holding below the 9 EMA. So the blue is the 9 EMA, pink is the 21 EMA, and the purple is VWAP. It's consolidating near low of day, and it breaks below low of day on volume, and it's also breaking below the prior day's low, and you can see that volume coming in there. And it's also worth mentioning, if we just go back and look, I'm not going to put it on the chart, you're just going to have to trust me or take a look yourself, but if you anchor the VWAP from the low of this candle, where the move started, that was right around 2660, 2670. And you could see in the morning, it was testing that area and pushed off. So all part of the plan. It breaks below, puts in a new low, breaks below the prior day's low, and I'm taking profits. I'm taking profits into this move. Then you could kind of see a little bit of a double bottom here and trades back above. At this point, if you go back and look at my executions, I'm covering this short into this down move. And what I'm doing is I'm leaving on 20% of the position with a stop at high of day, just in case it continues to trend lower, because at the time the market was looking very weak. The market was trading lower, and if you look at the tick, we were not getting any ticks above 0 all morning. So that's a signal to me that we could see a potential trend day in the market. And I was stopped out on the remainder of that 20% later on in the day. But overall, a really solid trade. If we look at the daily, you can see this $12 level. The day before this trade, the 23rd, you can see it pushes up to 13 on elevated volume, highest volume it's done in about a week and a half. And then it fails and it closes back below 12. You can see, gets above 13. You have a failed follow through new high. Closes below VWAP, closes below that $12 breakout area. You can see that $12 area. Closes back below. So we have a little bit of a false breakout. Again, similar plan, looking for a pop into 2-day VWAP, but it might not get there. I was also looking at like this $12 area or for a retest and for $12 to act as resistance again. See, off the open, just being patient with it, pops into 12, gets a little bit above 12. The offers are stacked at 12, gets above by 3 cents, and they slam it right back down. So I'm shorting right on this turn here. You have two options. You could just say, hey, if it starts to hold back above 12, I'll cut the trade. Or you could risk to just above 2-day VWAP, which is $12.35. If it holds back above 2-day VWAP and it holds back above that prior close, you're definitely wrong on the idea. Now, I think it's important to mention if we didn't get that shift in momentum in the market the prior day where the SPY failed, it looked like a false breakout, debt ceiling talks weren't going well, I would have been much tighter with this trade. But because I have an opinion on the overall market and price action is confirming in the overall market in the SPY, I want to give this trade some room to work. What I would hate is if it popped back into 12, got a little bit above 12, and then failed, and then had this move without me. So given the context of the overall market, I'm willing to give this trade some more room. And I just think, again, it's really important to highlight that these second day short setups, they're one of my favorite setups. But more so when the overall market, you have those tailwinds at your back from the S&P and the NASDAQ. That's what really makes these second day short setups A+. So when you're combining higher time frame technicals on these high short interest stocks that have been squeezing, most of them have been squeezing, and then you have the market in agreement, that's what really makes these setups great. If the market was ripping higher and we didn't have that bigger picture view of the market, I would not really be risking these trades up, and they might not even be on my radar at all. I might actually even have a long bias on some of these. But again, market context goes, it really helps out a lot for these types of trades. And that's the reason why I was willing to put risk on in these. So taking that short on the failure of 12, giving it some room, and then just riding it down. You could see that it gets below VWAP, fails from 12 on volume as well, starts to consolidate near lows. I could have added here, but really I was in as much as I wanted to be in versus a hold over $12.35. And then just using these EMAs as a guideline. You could see that it holds below these EMAs really, really well, which to me, that's really indicative of a strong trend. Anytime you see a trend and the 9 EMA is acting as resistance on the short side or support on the long side, that is really the definition of a strong trend for me. So just being patient with it, breaks below the prior day's low, I'm covering some, pops up, fails from the 9 EMA, fails from the previous day's low, puts in another low, I'm covering some more as momentum slows down, and then just keeping a close eye on it. And what you see here is you see the stock start to break the downtrend, reclaim the 9 EMA. So starting to see a little shift in momentum, breaking that downtrend from the morning, It's gone about an ATR already from the high, breaks the trend, the trade's over for me. Gonna move on to PLTR. So you can see it's had a big run up, pretty much from 750 to 13 in a straight line, almost a straight line. And it's starting to get overextended. If we put on these bands, it's up 5 ATRs from a 5-day low at this point, and you could see that pushes above 13, puts in a lower high, closes below VWAP. This one, we did not get much of a pop in it. So, if my game plan is not playing out, I'm just being patient and I'm looking for other short setups because I do have a short bias on this stock today. And, if my game plan is not if it's not playing out, I'm still going to have the stock up, on my screens and look for any other trades. Now, I'm not going to trade it as big as if it is working to my game plan, but I'll still look for scalps and momentum trades. So you can see it's trading pretty tight between 12 and 12.20. You can see it's putting in a higher low, higher low, higher low, higher low, higher low, but a lot of resistance at this 12.20. Now, I simply just draw this trend line, just keeping it very simple. It tries to consolidate over VWAP. It's consolidating above its opening price, so it's holding green on the day. And I bet there were a lot of longs trying to get involved here, trying to buy this dip for a breakout over high, and they're kind of saying to themselves, okay, it looks pretty good. We have these higher lows, it's holding above VWAP. Now it's consolidating above VWAP longer than it has, which hasn't really put in a tight consolidation above VWAP. And then when it breaks this trend, in my opinion, they're all wrong. So any people getting long, they're going to have to hit out. And you see this volume come in at 10.04, and I'm taking a short here around $12, 12.06. I believe I hit, and really just keeping it simple. My risk is if it breaks back above this consolidation, momentum slows down, I'm covering some, pops into the 9 EMA, fails, I'm covering some more, I'm leaving. I believe I left 20% on, and I was stopped out at break even. So just a quick momentum trade there. My game plan didn't play out, but I still have a short bias, so I'm looking for valid short setups to get involved. UPST, this is another high short interest stock, recent runner, gapped up on earnings, pulled back, held the 100-day moving average, went from 16 to 30 in pretty much a straight line. The day before the trade, puts in a high, holds VWAP, failed follow through high into 30, holds below VWAP, closes really, really weak. So this was on my radar as well, and you can see a gap down. So just the weakest out of the bunch. My thought was I don't really think it's going to make it to 2-day VWAP at $28, but something I will look at is this 2650 area. And if we look down here at the 5-minute chart, you can see 2650 acted as resistance, broke above it on volume, held into the close. So just an area that I'm looking at, potential resistance again. Off the open, pushes higher, which, I kind of expect. It's recently been a very strong stock. Failed from 30, closed near 26, and it's gapping down to 25. So it should have some sort of a pop. It could definitely fail, but for a stock that has been very strong, and it's gone from 30 to 25 pretty much in a straight line, I typically don't want to be shorting into that weakness because it's likely to bounce because it has been strong. Off the open, 25 into that 2650, starts to fail, and I'm taking that short. Fails below VWAP, pops up into VWAP, fails again, and I'm going to add a little bit to this one here. So pops into VWAP, tries to hold above, fails, and as it breaks this recent low, I'm adding a little bit. And the reason why I added to this one and not the others is because this was the weakest out of the bunch from the prior day. So I think it has a lot of potential to head back down towards like this 23 support area. Moves lower, pops into VWAP, wicks into VWAP, and then fails, which is really very, very clean. Exactly what I want to see on a retest of VWAP. Can't ask for much more. Gets towards low of day in that $25 pre-market area, and I'm covering a little bit. I think I covered about half. Now it pops back up. It's failing from the 21 EMA, looks good, starts to consolidate below, but then it starts to curl up. And this, I don't really want to see this. I kind of just want to see it continue to respect these EMAs and roll over, sort of what Carvana did that we just went over. And it's not really doing that. So in my opinion, what we have is a failed follow through low. It goes red on the day, it gets below the opening price, makes a new low by just a few cents. And typically, if a stock is going to be really weak, you don't really want to see it go red on the day, make a new intraday low, and then reclaim those levels. You want to see what Carvana did, which was just clean downtrend, breaks lows, has no problem moving lower. And this wasn't really happening here. I started being more defensive and I was covering. And then it started to look like it was putting in a higher low and it curled up. And at this point, I covered most of it and I was left with 20% with a stop at the highs. And I got stopped out on the rest. And again, for these trades, the reason why I wanted to leave 20% on is because I thought there could be a potential trend day in the market, giving the false breakout, giving the shift in momentum, given the fact that the debt ceiling talks weren't going well. And on this day, there were no debt ceiling meetings scheduled. So we weren't going to get any headlines about progress on those. And I thought, the market does have potential to trend to the downside, especially given the fact that there were no ticks above zero almost all morning. And then lastly, I just wanted to go over a breakout setup from last week. So here's a chart of Micron, and since last July, 65 has acted as resistance. So like 64.50-ish to 65, big resistance area. It keeps pushing up. And the more resistance or support level is tested, the more likely it is to break. And if we zoom in a little bit to the last few months, you can see that it's been putting in higher lows. So traded down into the 100-day, 200-day moving average, reclaimed. Traded down to the 50-day moving average, got below it, closed below it, reclaimed. And what we have is a low, higher low, another higher low, and it's pushing back up towards 65. Now, on this day, there wasn't any news on Micron, but because it was closing over that 65 level or right at that 65 level, I was willing to buy some calls for the following Friday. So just giving it some time. Don't want to buy weekly since it was Wednesday. Your premium is just going to evaporate if it doesn't work. So you want to give yourself some time. I was sitting at my computer after hours and there was a headline that hit. And basically the headline said that MU is getting $1.5 billion from Japan. They're investing in Micron because they need more memory chips. Got long on that. Just some size after hours to take into the next day in case it gapped up and ran. So, in my thinking now, we have a big higher time frame breakout, potential higher time frame breakout on a positive news catalyst. And the longer something bases, general rule of thumb, the longer something bases and tests resistance, like this did for like the last almost year or so, the bigger the breakout you're going to have once that level breaks. Bigger the base, bigger the breakout. In the morning, my idea was there's a positive catalyst, there's an A+ higher time frame breakout. This should not hold below 65. If it holds below 65, the catalyst is not as good as I thought it would be. So just going into the day, the plan is hold under 65. I'm wrong. You can see in the morning, dips into 65, starts to reclaim VWAP, buying some more here. And then you just get this really nice momentum move from 66 up to about 68.50. And general rule of thumb for like my equity position is as momentum starts to slow down a little bit, I'm scaling out. And if you go back to my executions, you could see how I did that. I know that this is a higher time frame breakout. It's an A+ breakout on a news catalyst. Micron is doing R vol. It dipped into support, So prior resistance acting as support goes green on the day, clear stop under 65. And then just for my equity position, as momentum starts to slow, scaling out at 10%. Momentum starts to slow up here, 67.20s, scaling out at 10%. And then I continue to do that until it breaks the trend. And you could see that it was very, very strong. Typically on a strong, just like a regular strong trend, you'll see the 9 EMA act as a support. It'll trade into it, bounce from it, trade into it, bounce up into it, bounce off of it. And in this case, it was just so strong, it wasn't even pulling back to it. So it's just scaling out of my equity position. It starts to break trend. And as it starts to break trend, I'm now out of those options that have gone up, well over 100%. So again, anytime you see a big base and a breakout and there's news, that's an A+ breakout setup.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training.
That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.